All right, welcome to Talk Tickers. Today, we are digging into Palo Alto Networks and their frankly pivotal fourth quarter results for fiscal 25. And look, this was a landmark report. I mean, it was packed with everything: incredible execution, a monster acquisition in the pipeline, and even a major leadership change. So let's break down what's really driving this story.
So let's start with the punchline, right? The market's reaction was, well, immediate and pretty decisive. Shares popped almost 5% in after hours. So the big question is, what did investors see that got them so excited? Well, that's exactly what we're going to dig into.
All right, let's get into the headline numbers. And really, the long story short is that Palo Alto Networks delivered a super strong clean beat. This just set a really bullish tone for the whole call, and you could feel it in their outlook for the year ahead.
So when you look at the actual numbers, it's a clean beat right across the board. You've got non-GAAP EPS coming in at 95 cents. That's a solid 7% above what the consensus was looking for. And then on revenue, they hit $2.54 billion, which beat expectations by about $40 million. And look, in this macro environment, these are not small wins. This stuff signals real underlying operational strength.
Okay, a headline beat is great, for sure, but the real story here is what's going on with the underlying growth engines. So let's peel back the onion and look at the key metrics, because this is where the market is really building its conviction.
And you don't have to look far. Just check out their next-gen security business. We're talking annual recurring revenue, or ARR, for this segment growing an incredible 32% year over year. That brings it to $5.6 billion. And let's be clear, this isn't some legacy hardware business.
No, this is the future of the company, and it is accelerating at scale.
And then there's the RPO, the remaining performance obligation. Think of this as the company's backlog, all the future revenue that's already under contract. Well, it jumped 24% to a staggering $15.8 billion. But here's the really critical part. This is the fastest RPO growth they've posted in 7 quarters. So that's not just a sign of strong demand now, it's a signal that this demand is durable, it's locked in for the long term.
So, when you put it all together, what do you get? You get this incredibly powerful, multifaceted growth story. You've got that 32% growth in NGS ARR, which is the future of the business. You've got 24% growth in RPO, which is your long-term contracted revenue, and all of that is supporting a really healthy 16% total revenue growth. I mean, this is the picture of a company just firing on all cylinders.
Management also made sure to point out that they met the rule of 50 for the full fiscal year. Now, for anyone who's not familiar, this is a really key benchmark for elite software companies. It's pretty simple. You take the company's revenue growth percentage and you add its free cash flow margin percentage. If it's over 50, you're looking at a company that is just masterfully balancing aggressive growth with strong profitability. And guess what? Palo Alto expects to nail it again in fiscal 26.
Okay, so we've covered the what. Now let's talk about the why. Why is the performance so strong? Well, these numbers are a direct result of a core strategy, one that CEO Nikesh Arora spent a lot of time talking about on the call: platformization.
And this quote from the CEO, Nikesh Arora, it really just captures the entire thesis perfectly. Security is no longer a bolt-on. It is a foundational enabler of transformational success. What he's saying is, the whole era of buying dozens of different point products from different vendors and trying to stitch them all together, it's over. In a world with AI-powered attacks, security has to be an integrated, foundational platform. It can't just be some afterthought.
And this shift is really at the heart of their entire strategy. You know, on one side, you've got the old way, this fragmented, siloed approach with dozens of point products that just can't keep up. And on the other, you have the unified platform, which just delivers flat-out superior security. And the proof? Well, Palo Alto signed a record number of these big platformization deals in Q4. And get this, they're seeing an incredible 120% net retention rate among those platform customers. That's just fantastic. And what's the big catalyst that's accelerating this whole shift? It's AI, of course. Management was crystal clear on this point. The rapid adoption of generative AI is creating this huge, brand new, and incredibly complex attack surface. This isn't a problem you can solve with a few new shiny tools. No, it requires a fundamental rethinking of security, which, of course, plays directly into Palo Alto's platform strategy. And that brings us to their absolutely massive bet on identity. So in late July, Palo Alto announced its plan to acquire CyberArk for around $25 billion. Yeah, that's billion with a B. And Nikesh Arora said he believes the identity market is at a major inflection point, specifically because of AI. So this whole acquisition is a huge strategic play to fuse best-in-class identity security right into the core of their platform.
Now, as if all this wasn't enough, in the middle of everything, the company also announced a huge leadership change. The founder and CTO Nir Zuk is retiring after more than 20 years. I mean, that's a big deal. But in his place, the longtime Chief Product Officer, Lee Klarich, is getting promoted to be the Chief Product and Technology Officer and is also joining the board. And what's really telling here, despite the departure of a legendary founder, the market's positive reaction just screams confidence in a seamless transition and in the company's future.
Okay, so the quarter was great. The strategy is clear, but what really sent the stock higher after hours? It was the forward-looking guidance. So let's take a look at what they're projecting for the year ahead, because this is key.
Their guidance for the full fiscal year? It came in above Wall Street expectations on pretty much every key metric. They're guiding for 14% revenue growth, up to 15% growth in earnings per share, and a really powerful 26 to 27% growth in that all-important next-gen security ARR. You just don't guide like that unless you have immense confidence in the business. And they expect that momentum to start right away. The guidance for the first quarter of fiscal 26 shows they're hitting the ground running. We're looking at continued double-digit growth right out of the gate, with revenue up about 15% and EPS also growing up to 15% year over year.
All right, so we've covered the results, the strategy, and the outlook. Now it's time to put it all together, to synthesize all of this into our forward-looking analysis and, of course, our rating.
So this is it. This is the question that every single investor is asking after a report like this one. What's the call on PANW? Where does the stock go from here, and how do you play it?
Okay, our first tried idea we're calling the AI-driven identity arbitrage. The thesis is pretty straightforward. As Palo Alto integrates CyberArk, we think the market is going to reward the one company that can deliver a true consolidated identity firewall. And at the same time, it's going to penalize all those siloed, pure-play identity vendors. So the play? You go long PANW, and you short a basket of the smaller, single-point identity solution providers that just don't have a broad platform vision to compete in this new landscape.
And for our second trade idea, we're calling it the browser as the new OS. Now, management emphasized this again and again on the call. The enterprise browser is becoming the single most critical security control point for AI agents. And what that does is it makes a lot of legacy endpoint solutions basically obsolete. So the play here? Again, you go long PANW, but this time you offset it with a tactical short on some of those legacy endpoint or perimeter security vendors who are just being too slow to adapt to this massive shift. So all of this brings us to our final rating. When you look at the powerful Q4 execution, the accelerating platform momentum, the strong guidance, and the incredibly clear forward-looking strategy around AI and identity, for us, our rating on Palo Alto Networks is outperform. We believe this company is positioned to continue taking market share and to deliver truly superior growth for the foreseeable future. And as always, please remember, this is not financial advice.